Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session, or actually a later session update. I actually started to work on one for your earlier video, and I started having a flare-up of coughs. I'm still battling with what we're calling long COVID now, and that's when people that have symptoms that last more than the typical 2 weeks or so. So I am slowly but surely getting better. The fever is not as bad anymore, and the bouts are less and less, but I'm still having to spend quite a bit of time away from my desk. Especially when I get these little, what I guess they call flare-ups. Anywho, back to the charts. Now today we've taken out, to my surprise, without even hardly a pause there, that uppermost potential target zone from all the way back then. It was resistance about the up to the 1200-ish level. Excuse me, 12,000 level on NQ, and so I at this point. All I can tell you is we are extremely overbought. That's measured out here on the RSI, as I pointed out this morning. It's almost unheard of to hit that 87-ish level and not have at least a reaction. I'll go over this on QQQ in a second. Sometimes you have it, you hit that level and you get a little bit of a consolidation there without a correction or a little minor correction, and then sometimes if you get another one in close proximity, that's where the top comes from. But again, so other than overbought, and I would say that overbought in itself is not a sell signal, but as of now, we've just smashed through those resistance levels. Now, again, the catalyst here is the breakout. This was the most important level right here, the top of that multi-week trading range, and we took it out on Friday. Never looked back. I mean, we rallied. I thought we might get a fade into the close on Friday. We didn't. Instead, they bought it up, and then when futures picked up, opened back up on Sunday night, they just kept buying it up. So that is what it is. And that's that energy, I talked about for a while there. When you're in these trading ranges, it is like a coiled spring with the market building up energy. And so there's your next tradable trend. So far, it's been probably good 4%. I know this morning it was about 3.5. Better than that, almost 4.7% since the breakout above the top of the range at 11,606 level. So where we go from here, like I said, I'm surprised that we haven't pulled back yet. But again, overbought can become overbought for some period of time. And what I said this morning, I maintain I don't think the risk reward is attractive very near term. Now I want to clear that up too, because I talk about all the time. I talk about near term, intermediate, longer term. For many weeks now, I said, and I'll still stand by. My enthusiasm is a little less tempered, but I said the next or a definitive break, then there's the bottom, the lows, above or below the trading range is likely to determine the next tradable trend. And that's it. And that just, that's as definitive as it gets. We broke out on Friday, closed above it somewhat, and then again with the futures moving up Sunday night, that caused the gap up in the Qs today. So this is what you can say is an unmistakable impulsive breakout. Now it's a matter of how much more does the market go? It's rare to see go much more when you're this overbought on the 60-minute time frame. But again, anything is possible. But we're going near parabolic now. So again, risk reward's not so hot. There's the previous highs. Let's look at QQQ and then we'll move on. And I want to cover a couple other items. QQQ. When I did the update this morning, we were right at the bottom of that max potential bounce target zone, which was a former T1 zone, about 293. Call it 291 and a quarter up to about 293 and a change, and we powered right on through it. So there it is, and you can see down here when you look at QQQ. Let me flip over to another board. We're going to talk about this overbought reading right now going on. Okay, so down below. Here, I'll park the PPO. We'll just look at the RSI down here. Down below, you can see that level. It's about 77 on the RSI, which we're now well above on QQQ. And you can see the arrows. Typically when you hit that level, you hit it here. You had a little bit. You hit it a couple times. Slowed things down, but again, sometimes you get these double taps where the big drop comes after the second very close consecutive reading, and that's usually almost always on divergence right there. So sometimes it's a one and done. Back here we came very close, but not exactly there. But we were quite overbought, close to that level. There we hit it, correction. Here we hit it, and again, if you look closely, we did correct a little bit and we moved sideways. That's the main thing. We consolidated for a few days and then moved up, and less than a week later put in that second divergent high close to that level. And again, you might want to put this line down here. You can play around with it, put it down about 75, and that's where the arrows line up. And you can see again, extreme overbought. Now, one thing I have to say about the nature of this overbought reading too, I'm talking about how it's checked a lot of those previous rallies, is it came, you have to always put in context of where did it come from. Were we inside this trading range when it happened? No, it came on the breakout of the trading range. Again, to go back here to this board, I'm talking about that multi-month trading range right there. And again, it was the catalyst, was that divergent low. So that's it. You got a big old gap right here. There was that breakaway or breakdown gap on the Qs back there. That's next up for resistance, and that's just overhead. Extremely overbought. And again, all I can say is as of now, that's bullish. And as far as a pullback goes, I said this morning, if you were to get a pullback, the elections are coming up. So I'm gonna say that, and that makes me a little less keen trading equity markets because they're more prone to sudden news induced. Trump can tweet out, or even the news can release something about the stimulus deal, or anything else that's going on right now politically, can just jar the markets there. And so I'm going to roll into the commodities again. That's where, fortunately, the stock market's not the only thing out there in town, and it should never be. I think, I don't think 100% of anyone's trading. So let's move on to some of the other things that I've been looking at, and that would be, let me pause this. Natural gas. So this is NG, nat gas futures, trading very well to the technicals lately. You had, to recap, this bullish falling wedge pattern right there, complete with positive divergences, similar to what the setup in the Nasdaq 100, the divergent low at least. On this one, you had a nice clean downtrend line. Pulse a breakout, hit that 207-ish, 207.08 target. Back tested the trend line, ran at it again, then took it out and closed above it. That was bullish and gapped up today. And look at that, almost a perfect tag of that next target, which is was the intersecting downtrend line and the 2915 resistance level. So there it is, and that's decent pullback so far, giving you plenty of opportunity for an active trader to take out. So just like the broad markets, I think pullback targets, you have a big old gap below. If you get a correction to be backfilled, and a backfill of that gap would certainly be one area where the buyers may step in and a potential objective long entry. Other than that, this 207.08 level is a big support now because it's been tested numerous times recently, numerous reactions on that level, and then a breakout right here. So now it may or may not fall back that far. I don't know. Once we took this level out, I had confidence we'd come up to the 2915 level on the downtrend line. Where we go from here, there may be a deeper reaction. And if so, those are the levels if you want to buy back into or enter nat gas if you hadn't, yet. And otherwise, a break above the trend line, and really, because the trend line, depending on if and how we correct, the trend line comes in at a different level every day. Trend lines are upward or downward sloping, so therefore the price level changes. So if we got a correction back to the 207.08 level and then worked up there, and then broke out, well, guess what? You're going to have the 2915 resistance just overhead, and that may give you a reaction. So the safe bet at this point is to wait for the next break above the 2915 level. Of course, you had a brief momentum fueled overshoot if you want to be extra safe. Your entry's not as sharp, but you could wait to see that previous reaction high taken out again. So that's it. Either a breakout above those today's highs, pretty much, to take us up to the next target, or a pullback there to that 2708 target with a stop somewhat below. Those would be your objective entries. And again, this was, and it still is, we've given some back. We had plenty of opportunity to book profits today at that level. And not only on NQ, what's not unusual, but you don't always get this on UNG, they also gave you an objective exit time to book profits. UNG is the ETF, and the thing about natural gas is a lot of times the futures will hit key resistance or support level or one of my price targets before or after hours when UNG is not trading, not between 9:30 and 4 p.m. And what happened today is we gapped up at the open. You can see we took out the downtrend line on the gap up today. It was UNG. Gapped right up, and all day it's been stalling, being capped at that 1305 target that was laid out last week or two. So that's it. And additional targets, sure, let me give you some now. But again, 50-50 whether we're going to pull back, and if you do, there's your objective entries down to about that 1221 level, and if we can break out above, I would say right here. And again, the thing about the commodities, including natural gas, is they're not as impacted by, I don't believe, by what's going to happen with the election. So the one thing I expect in the coming weeks here is volatility and whipsaw signals too. Not to take away from today's breakout, it's pretty powerful. Markets would have to reverse quite a bit to undo it, but anything's possible again coming into the elections. All right, so coffee, KC. Not crazy about today's action, but it's still constructive. Remember last week we had taken out this downtrend line. We had regained that 108.60 level. This is KC Coffee Futures after putting in the divergent low. Moved up, made it close to, but a little shy of that 114.94 target. We can add a trend line right here to watch, potential uptrend line. We need to get a third reaction. In my book, any 2 points can be connected at random. It takes a third reaction to validate a trend line, in my opinion. So we'll be watching for that. And if we reversed here soon, that would pretty much do it. Depends how you draw it. So you can go in like this, real tight. You can come in a little bit looser. But give or take, we're pretty much there now. And look, we did. Actually, let me zoom in. We did kiss that 108.60 support on the pullback. So there's your objective entry right there. There's support there, price support. We reverse off the trend line, you'll have a valid trend line in which to trade and also set stops if and as we continue to move higher from here. So still liking coffee, and for those of you that trade the ETN, this looks nice and clean. This is Joe, the coffee ETN, and what you have here is that bullish falling wedge pattern right there, complete with the positive divergence, bullish divergence, breakout, which was impulsive. First rally up right to the first target around, a little shy of $34, $3.90 or so. Pullback. And so again, if we can reverse, let's draw a little down uptrend line right there. If we can reverse here soon, your next buy signal comes on a break above that. So 33.90 change, whatever, give or take. Remember, these are unadjusted targets, actual resistance levels. So if you're going to book profits, you want to always set your sell limit order slightly below the actual resistance level, because it's not uncommon for the sellers to step in early on well-watched levels. And again, Joe is tracking coffee futures, does a darn good job, but not a perfect job. So you want to be a little bit liberal with those targets. As far as setting your sell limit orders, below them. And again, if that was your preferred target, if you're swinging, hoping for the next leg up in coffee, then at this point in time, I'd just be concerned about, maybe raising stops or keeping them in place right now below those recent lows at the most. And I haven't thrown out many individual stock trade ideas lately, but there's been just a few last week, and DKNG, or last week or two. DKNG was one of them, DraftKings. This is a 60-minute view. Originally was based on the daily chart. I'll get to that in a second. Just a nice, clean, bearish rising wedge, negative divergence, everything you want to see. Broke down right here, moved lower. It was an easy entry because we didn't gap down below the wedge. Closed right there on that first target, 55.39. Then gap down below it. That was support. Support once broken becomes resistance. You had a second opportunity on the kickback to that 55.39 area. And again, you want to wait, don't wait for 55.39. If you're going to short it, you want to, or add to it, you want to go in at, 59.35, 34, 36, somewhere in there. You get a little closer. It all depends on the share price. I can't tell you an exact penny amount to adjust down because it's all relevant to the volatility of the security and, of course, the share price. There's a big difference on 3 cents if you're trading a $10 stock or a $200 stock. Very, very big difference. So, all right, $48 target hit and a bounce. That's it. So there's, keep it very simple. Breakdown, wave one down, kickback rally. We are in no man's land right now. No man's land is what I define when a security is between support, which is about $48, and resistance, which is about $55.40. So do you enter a position here? In my opinion, no. You either wait for a kickback up again to that towards that 55.39 level, or you wait for a break below 48.01 for that next target, $44. And the daily chart, was based on a break of the same trend line. Really, it's just on a daily time frame here, and target was a little bit different there, close, and these are potential longer term targets. Okay, I want to keep the video brief. Coal and solar are two on my radars. I've covered both recently, so I'm not going to go over each and every stock in that sector. The coal stocks I've been bullish on for a couple months, but then recently we started hitting a lot of the upper targets. XXC was working its way up, hit that 397 target, and a lot needed to correct. They were getting overbought. I'll rifle through some of these fast just to see the names. Like HCC, there it is. That was one of my uppermost targets, about 21.28. From the back test of that trend line right there, it rallied about 33%. Hit that, became very overbought. You look at the RSI down here, and it came back in. That's starting to crack into that below that 1646. Not so good. Needs to reverse. Where these coal stocks go from here and where the solars go will likely depend on the election. That big green deal or whatever that the Biden administration's wanting to push through. And these guys are, no pun intended, I just happen to be on the stock, arch enemies, solar and coal. I mean, coal is about the dirtiest fuel source on the planet. Solar is about the cleanest. So obviously that, depending on which way things go, you could either have a route. Well, either one. The coal stocks can rally on a Trump win, whereas the solar stocks, I think the risks in the solar stocks are not equal. They've already run up so much. They're so overbought with divergences that I think the risks, again, are not equal, whether you have a Trump or a Biden win, because I don't think there's another 50 to 100% upside in the solar stocks. I think that's already been built in, and in recent weeks with the polls, Biden leading the polls, I think that's been, further built into those stocks. So it's kind of a buy the rumor, sell the news thing. Doesn't mean that the solar stocks are going to go down, win or lose, for a Biden ticket. It just means they're probably not going to go up. A lot of that, I'll get to those in just a second. But before I leave the coal stocks, I wanted to point out that, a lot of those, and that's where I started getting away from updates when a lot of these upper targets like Arch, resources hit that 5350 target on the breakout back test here. That thing rallied about 66%. ARLP not doing so hot. Some of these not doing hot, some still doing good, like METC, the inverse head and shoulders breakout, and already hitting that 387 target last week. So some of these are hanging in there. CTRA was one of the biggest movers. Listed that here. We had a breakout there, but I believe I listed the objective entry at the time when I started following it on a break above 494, trying to measure it for you if I can get close enough. And that thing ran about over 100% from that breakout just above the 494 level, and it ran right into that 942 target. That's a pretty big resistance level, and again, it did so very overbought. So that was point here is solar stocks needed to and have been, especially those that have run so far, taking a breather, and they're kind of bouncing between support and resistance. Both the solars and the coal stocks are pretty much, in my opinion, a crapshoot leading up to the elections. If you like to gamble and you don't want to go to Vegas right now due to COVID, hey, sure, take one of these and bet. You want to bet for a Trump or Biden win. Trump win, you go short solar, long coal, and vice versa. We'll move on, and let me see if there's anything else I wanted to update. I think that's it. Gold and silver continue to chop around. They put in highs weeks ago, and you look at gold, I'll go down to a 60-minute chart here. It's been moving lower. It did put in a divergent low like the stock market on the GLD 60-minute chart recently, and moving higher since. But overall, this was the peak back here in the beginning of August, and it's been in a downtrend since. So again, choppy, not going anywhere, and so I'll do updates once in a while because I know there's always a lot of interest in gold and silver. I just think there's better trades to be made elsewhere. And so to kind of sum it up, Equity markets, that breakout, on Friday was built upon today. Nothing but bullish on face value from technicals. Just as we're heading into the elections, getting a lot closer, be prepared for anything, and just keep in mind that headlines are going to move this market, and they can move it either direction. So it's probably not a bad time to keep position sizes light, especially on the equity markets. You want to find an obscure sector or commodity that doesn't really isn't really dependent on what's going on in the political arena. Then you can trade those as is. All right, until then, let me wrap this up and get it out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.